Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth right here in Singapore. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 58,000 likes. I've produced over 900 videos with more than 500,000 watch hours as of June 2025. I also focus on regional and global economic trends. If you're serious about taking your Singaporean investment journey to the next level, you'll want to hear this. Here's the burning question every Singapore investor is asking right now. Are DBS, OCBC, and UOB still worth buying when Trump's tariffs are crushing earnings, interest rates are falling, and bank stocks have already climbed so high? Most investors are confused. They see these banks paying record dividends, but worry about slowing growth. They want that steady 5% yield, but fear they're buying at the peak. I've cracked this puzzle into 7 game-changing insights that will transform how you view Singapore's banking giants. These aren't just surface-level observations. These are the deep truths that separate winning investors from those who miss the boat. By the end of this video, you'll know exactly which bank offers the best opportunity right now and why these dividend powerhouses might be your smartest play for 2025. Here are the 7 crucial points we'll cover today. First, why these banks are actually fortress strong despite the headlines. Second, the real story behind their Q1 2025 earnings that media missed. Third, how they're navigating the perfect storm of challenges. Fourth, why their dividend yields are sustainable gold mines. Fifth, the asset quality secret that makes them bulletproof. Sixth, which bank offers the best value right now. And seventh, my personal investment recommendation that could change your portfolio forever. Let's dive into point 1. Singapore's banking fortress is stronger than ever. DBS, OCBC, and UOB control over SGD 265 billion in market cap. That's more than half the entire Straits Times index. Think of them as the 3 pillars holding up Singapore's economy. When you buy these banks, you're not just buying stocks, you're buying a piece of Singapore's financial infrastructure. These aren't just local players either. They're regional powerhouses with tentacles across Southeast Asia. DBS just became the first Singapore bank to hit USD 100 billion in market value. That puts it among the top 25 banks globally. OCBC and UOB aren't far behind. This scale gives them pricing power and defensive moats that smaller banks can only dream of. Now let's examine point 2, the real Q1 2025 earnings story. The headlines screamed about profit declines, but here's what they missed. DBS posted SGD 2.9 billion in net profit, down just 2% year over year. But dig deeper. They achieved record total income of SGD 5.91 billion and record profit before tax of SGD 3.44 billion. The profit dip? Just higher taxes from the global minimum tax rule. OCBC saw a 5% profit decline to SGD 1.88 billion. UOB stayed flat at SGD 1.49 billion. But here's the kicker. All 3 banks beat analyst expectations. They're not struggling. They're managing through uncertainty, like the pros they are. Moving to point 3, how they're navigating the perfect storm. 3 major headwinds are hitting these banks right now. First, Trump's tariffs are creating trade uncertainty. Singapore faces a 10% baseline tariff with potential escalation. Second, net interest margins are under pressure as rates fall. DBS saw its margin drop to 2.12%, OCBC to 2.04%, and UOB held steady at 2.00%. Third, loan growth slowed to 3.4% year over year in April 2025. But here's what separates great banks from average ones. Adaptation. All 3 banks increased their general provisions proactively. They're building war chests for uncertainty. They're also crushing it in fee income, especially wealth management. When lending slows, they pivot to higher margin services. That's financial engineering at its finest. For even more detailed charts, deeper dives into the data, and a full written breakdown of today's topic, make sure to check out our Substack. The link is right there in the description. Point 4 reveals why these are dividend gold mines. Based on 2024 payouts and current prices, the yields are mouth-watering. DBS offers 4.9% yield, OCBC leads at 5.2%, and UOB delivers 5.0%. But here's the beautiful part. These aren't just high yields. They're sustainable yields with payout ratios around 50%. Think of it this way. If you put SGD 100,000 into OCBC today, you'd earn SGD 5,200 annually in dividends. That's more than most savings accounts pay, and it comes with potential capital appreciation. Plus, all three banks are returning excess capital through special dividends and buybacks. DBS is paying SGD 0.15 quarterly capital returns through 2027. UOB committed SGD 3 billion in capital returns over 3 years. 0.5 exposes their asset quality secret. Here's what makes Singapore banks virtually bulletproof. Their non-performing loan ratios are incredibly low. OCBC leads at just 0.9%, DBS at 1.1%, and UOB at 1.6%. Compare that to global banks struggling with 3-5% NPL ratios. Singapore banks are in a different league. Their capital ratios are fortress strong too. Common Equity Tier 1 ratios range from 15.1% to 15.5%. That's well above regulatory requirements. Think of this as their financial cushion. Even if things get ugly, they have massive buffers to protect dividends and maintain operations. Point 6 reveals which bank offers the best value. After analyzing all the metrics, OCBC emerges as the clear winner. It trades at just 10.0x PE ratio and 1.2x price to book. That's the cheapest among the three. You're getting the highest dividend yield at 5.2% with the lowest NPL ratio at 0.9%. It's like buying a Rolex at Timex prices. DBS trades at a premium with 11.5x PE and 1.9x PB. You pay more, but get superior returns and digital leadership. UOB sits in the middle at 10.3x PE and 1.3x PB. It offers balance, but lacks the compelling value story of OCBC or the growth profile of DBS. Now, for my personal take on this entire situation, after covering Singapore banks for years and analyzing every quarterly report, here's what I believe. These banks are not just surviving the current challenges, they're positioning themselves to dominate the next decade. The trade war uncertainty is temporary. Interest rate pressures are cyclical, but their fundamental advantages are permanent. What excites me most is their defensive characteristics combined with growth potential. Singapore's role as Southeast Asia's financial hub isn't going anywhere. These banks benefit from every infrastructure project, every trade deal, every economic expansion across the region. They're not just Singapore plays, they're ASEAN growth stories. For Singapore investors specifically, these banks offer something unique, local market knowledge with global scale. They understand CPF rules, HDB financing, and local investment patterns better than any foreign bank. When you invest with them, you're not just getting dividends, you're getting partners who understand your financial journey. My actionable advice: start with OCBC for its value and yield. Add DBS if you want growth and digital leadership. Consider UOB for balance and regional exposure, but don't try to time the market perfectly. These are long-term wealth builders, not trading stocks. The key insight that most investors miss is this: Singapore banks aren't just financial institutions, they're wealth preservation vehicles in an uncertain world. Their government backing, conservative management, and essential economic role make them some of the safest investments you can make while still earning attractive returns. So, we've broken down Singapore's banking titans, and I've given you my personal take on how it applies to your journey here in Singapore. If you found this video helpful and want to seriously level up your investing game, please give it a like, share it with your friends, and subscribe to the Investing Iguana channel so you don't miss our next insights. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox, giving you a significant head start. It's just $1 a month, less than a cup of coffee. Think of it as your consistent daily dose of financial fuel for smarter decisions delivered before the masses. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today.